Gold has been really, they outperformed in the beginning and has underperformed over the last year significantly. I think it's one of the worst performing commodities over the last 12 months, but I think we're still firmly in an uptrend, and I think we're going to see much higher gold prices.
Please join us for our next live stream Sunday, August 1st at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, August 1st, 9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. As always, if you're new to our channel or if you haven't already done so, please do subscribe, hit the bell to be notified on new updates, and give us a thumbs up if you like what we do. We truly do appreciate your support. Brett Heath is our guest today, President and CEO of Metalla Royalty and Streaming Limited. Brett was previously heading High Street Corporation before Metalla acquired it back in August of 2016. He has a long career in corporate finance and investment management, and we're delighted to have Brett here as the first-time guest. It's time to saddle up and silver up for Brett Heath. Brett, welcome to SBTV. How are you doing?
Doing well, Patrick. Thanks for having me on.
Glad to have you on. Glad you could spend some time with us. And, Brett, it is your first time here with us. So could you share a little bit about your background and how you moved from corporate finance and investment sectors to the gold royalty business?
Absolutely. So I started off as a fund manager on the buy side. That the fund that I managed targeted gold and silver equities, and so we did quite a bit of diligence. We traveled all over the world. I mean, I think I've been to over 50 mines around the world. I've met hundreds of management teams, and while we were doing all this work, we just couldn't get past this royalty and streaming model. It was just such an amazing way to get exposure to these commodities. We were fascinated by it. At the time, there were only about 2-3 companies were in this business, the majors, if you will, today, and that is about it. So it was a really small sector. There weren't a lot of participants as there are today, but just a fantastic model. And these royalty companies ended up basically being a cornerstone piece of our fund, which allowed us to outperform. They were big outperformers over the bull markets, over the bear markets. And I was so fascinated by it in 2012, when we were entering a bear market. I decided to transition over to the royalty side. And I worked on the royalty side as a consultant with public and private companies for about 4 years, kind of waiting for the market to stabilize and give an entry point for starting a new royalty and streaming company with a slightly different strategy that we wanted to capitalize on. So that was kind of the genesis of how we got here. And fast forward just about 5 years in on Metalla Royalty and Streaming, We've grown the company from zero to about $500 million market cap. We've got just under 70 assets, and so it's been a pretty incredible ride.
Oh, sounds great. We'll touch on the how a royalty company works, but Brett, got to ask: are you a gold bug yourself?
Well, I would have to say, I mean, I do believe in sound money. It doesn't need to be gold; it could be anything that is sound. I mean, obviously, nobody likes their savings being inflated away. Unfortunately, the bulk of the population doesn't really have the ability to protect themselves against that. And this was one of the main reasons why we wanted to start Metalla. We wanted to create an asset that people could not only maintain their purchasing power, but thrive on it. Thrive on it multiples more, provide a ton of leverage, in relation to just an incredible asset class that we think is gold and silver through these very volatile times.
Okay, cryptocurrencies. Do you think cryptocurrencies will sort of eat gold's lunch as their prominence and applications rise?
There's no doubt that there is a place for cryptocurrencies in the future. more so, I believe, on the related applications that allow people to transact without any intermediary. There's a lot of utility and value in that. Now, for the 10,000 different tokens that are out there, that's a different story. And what makes gold so valuable is it has attributes that nothing else compares to. It doesn't tarnish. There's only so much gold in the ground. It's very difficult to find. It's even more difficult to pull it out these days. And it maintains the purchasing power. It increases by 1 to 2% a year, which is in line with the population. And it's just a great asset class, really the world's kind of currency, if you will. With the cryptocurrencies and the tokens, the problem here is that a lot of them have some great attributes. The problem is that a lot of the attributes are the same. And so as more and more of these things are created, actually the new ones have, in fact, even better technology, better privacy, lower costs, lower energy. And it would be the equivalent if you could go on the periodic table and create 10,000 other elements that have the same attributes as gold. Obviously, if you did that, gold wouldn't be worth very much anymore. And the most of these cryptocurrencies, in themselves, the technology is fantastic. But given that there's so many of these cryptocurrencies, the reason why some of the bigger ones are worth so much is because they have the market depth, the liquidity. They were first movers. But in every industry, we've seen first movers roll over. I mean, you look at computers, you look at the internet. There's tons of examples of the biggest players not being the future. So I think that is going to fall in line with these cryptocurrencies. I think a lot of these tokens are likely going to go to zero. But that being said, I do think over the long term, the benefit of particularly the related applications that improve the utility and improve the ability for people to transact amongst a number of different types of counterparties, I think there's a huge benefit there. So long term, I think gold has a very, very important role. But back to your original question, I do feel that there has been some capital that has flown kind of out of gold into cryptocurrencies. So short-term headwind, but I believe inevitably that capital will flow back into gold, which provides the opportunity right now.
Yeah, it's a great point. Brett, last year, how significant was the new high in gold to you? And is this the highest price that we're going to see for gold during this cycle?
I think in general, I think we're at the very beginning of a very long-term bull market in commodities. Gold has been they outperformed in the beginning and has underperformed over the last year significantly. I think it's one of the worst performing commodities over the last 12 months. But that being said, I think we're still firmly in an uptrend. And I think we're going to see much higher gold prices. If you look back historically, most of these gold bull markets last for 10 years. I mean, if you look back in the 70s, you look at the bull market, the most recent bull market from about 2000 to 2011. And I think this bull market started. The very beginning of it, I think, was 2016, kind of end of 2016. And I think this could last another 10, 11, 12 years. And typically the bigger moves that you see are on the tail end of that. So I do think, given the macro thesis of what's happening around the world today, that we will see higher gold prices. That doesn't mean that you can't have short-term volatility to the downside, but in general, over the long term, I think we're going to see higher prices.
Okay, bigger moves on the tail end. We hear that quite a bit. But do you recall how the run up in the gold price from the lows in March in 2020 to the record highs that we saw in August during the same year affected the mining and royalty industry? I mean, what was it like for those few months where prices just kept on rising and your screen was always green?
Well, that was just a very, very short preview of what a gold bull market looks like. And gold bull markets are uh, are just incredible, and gold bear markets are pretty rough. They move in extremes. They've always moved in extremes in these cycles in the past, and I think you want to be picking up and positioning during when times are tough. Right now, I mean, it's just an unbelievable entry point from a perspective of value, because you still have $1,800 gold about today, and the equities have been sold off as if gold's going back down to 1,300. $1,800 is a fantastic price for the mining companies. I mean, the royalty companies, they do well in low gold prices. I mean, that their margins are essentially upwards of 100%. So, in low prices and high prices, royalty companies do great. Obviously, with higher prices, it increases the amount of leverage for the royalty companies, for the mining companies. But I think that we're positioned for a much longer term bull market. So if your listeners experienced a very short term blip, last year, that's what a real gold bull market looks like.
All right. Well, I look forward to more of those. But, got to ask, as prices were rising, were there more interest from investors and greater positivity, let's say, in mergers and acquisitions?
Well, there was definitely more interest investors, and we saw, again, a very, very short kind of preview of what a small amount of capital flows does to the mining equities. And if you take all of the mining companies today, and you put them all together, they don't equal one Amazon. They don't equal one Apple. They don't even equal one Facebook. So it just puts it in perspective on how tiny this entire industry is in the grand scheme of things compared to other sectors. And if you've got the general public and institutions all of a sudden wake up and say, okay, well, we need it just to increase our exposure to gold from 50 basis points to 150 basis points. I mean, just that alone would be enough to move the gold equity sector by a very significant amount. So it's positioned when investors wake up. That's for sure.
Okay. And since that high in August last year, gold prices, they have trended lower, even going sideways till now. And the GDX is also seeing a similar pattern. What do you make of this seemingly indecisive sideways price action?
Well, it's a consolidation. It's lack of real investor confidence. But what we've seen during this consolidation is we've seen a bit of a rotation. We've seen, on a comparative basis, the juniors outperform the majors, and silver outperform gold. That's something very, very important to pay attention to, because how you figure out kind of what is going to be the leader on this next move is the relative performance kind of within the sector based on big companies, exploration companies, junior companies, royalty companies. And so what we've seen is we've seen the GDX relatively outperform the GDXJ relatively outperform the GDX, and we've seen silver relatively outperform gold. That tells me that this bull market's not over. Historically, if this was a bear market, we would see the juniors and silver perform much more poorly than the big companies. So this is a consolidation. I think investors are slowly shifting from some of the bigger positions, the bigger mining companies, the bigger royalty companies, into some of the more high growth silver and juniors, such as Metalla on the royalty side. And I think that's where you're going to find the real growth and performance on this next leg up.
Yeah, it's a great point there. But I mean, with this sideways action going on, and how gold and silver just can't seem to catch a bid and hold a bid. What's your feel about the sentiment right now in the mining industry? Is it business as usual, or has cautiousness set in due to prices not going higher after nearly a year?
Well, there's two answers to that question. The first answer is that from an actual business perspective, for most of the mining companies, I mean, business is fantastic. It's $1,800 gold. They're making a ton of money at $1,800. So the actual core business is great. The mining industry, I believe it's one of the highest yielding industries out of across all sectors right now. I mean, a lot of the mining companies, given the expansion in their margins, have increased their dividends significantly over the past year. So from a business perspective, it's actually doing very well. Now, from an investment perspective, it's reaching extremes on the pessimistic bearish kind of readings across the board. There's very little appetite for any generalist to get any exposure in gold whatsoever at this point. So from a contrarian perspective, it's really the perfect storm. I mean, you've got a very solid gold price. The sector is being completely ignored. And if you think about it, just a small leg up in gold and what that will do to the profit margins of the mining companies, at least the mid-tier and the major mining companies, it's going to be just absolutely extraordinary. And that's going to translate into the royalty side as well, with all the leverage that we can give investors on our models.
Okay. I mean, I'd like to ask, you're saying that 1,800 is good for miners right now, a good gold price for miners. Can I ask you, what is the cost to mine 1 ounce of gold?
So the industry average as of right now is around a little over $1,000 an ounce. So the margins are we're bumping up on kind of 40% margins as of right now, which is a very healthy business. But if you look at a small move of 20-30% on the gold price, you see the gold price go to $2,200, all of a sudden margins become over 50%, and that is very significant.
Okay. I mean, I know silver is a different animal, but do you have an opinion on what's the cost to mine 1 ounce of silver?
Yeah, so the silver margins aren't quite as good as gold right now. The average cost to produce an ounce of silver amongst most of the larger silver companies is kind of in the mid-teen range. So it's also got healthy margins at $25, but where we've seen silver move, there seems to be a bit of a cap right now at $30. I think when silver breaks through $30, we'll probably see 40 very quickly. And the reality is that I think silver could be much higher than that. I think silver could support a much higher price over the long term. It's not easy to find. Most of it comes as a byproduct. You got a little over half of it being consumed every year through industrial metals, which only leaves about half of the supply for investment. And it's what these companies do. I mean, when you've gone underground, a kilometer, and see these guys mining and having to truck up a ton or 2 tons to get 1 ounce of silver, it's just incredible that the price is only $25. So when you actually see all the energy that goes into it, you can really understand that in the long term, silver can support a much higher price.
Yeah, I'm also curious your opinion. Why do you think there seems to be that $30 or $28 cap on silver right now?
Well, I mean, some of it is technical. Some of it, there's a number of different factors that kind of go into, where that's trading and where, the cap is. I mean, the problem with the gold and the silver market today is the paper market is huge. So the physical market doesn't really control the supply as of right now. There's just so much paper out there. each actual physical ounce of silver. I mean, I've heard 100 to 1, I've heard up to 500 to 1. I mean, who knows what it really is, because there's derivatives upon derivatives upon derivatives on precious metals. You don't see that in copper, you don't see that in wheat, you don't see that in coffee. It's mostly driven by the ultimate end users that have to buy this stuff because they buy it and they put it into their products and then they sell it. With gold and silver, it's a bit different. Gold and silver, I mean, there's uses for jewelry, obviously, but most of the gold that has been ever mined, still sits above ground, whether it's in the form of jewelry or it's in the form of a gold bar. It's still sitting above the ground, and it is really supply. So having the paper markets that are so large, it gives a lot of control over where the price goes. And so I think that's kind of what the precious metals market is dealing with right now. But one thing that I know for sure is that over the long term, nobody is big enough to fight the trend. It's just governments, very wealthy people, big funds have tried this for since early civilization, obviously with much less technology. But as of right now, it still seems to be the prices still seem to be controlled by the paper markets.
Yeah, we hear that a lot, where the paper market does control the physical silver and gold market. Brett, want to ask one more question regarding the mines here. Generally, who is first in line at the mines? I mean, who's their biggest buyer?
For the gold and silver that the gold mining companies produce?
Yes.
I mean, the biggest buyer is central banks. It's been central banks for quite some time. I mean, you just saw a number of central banks they've been net buyers for I believe the last decade, maybe a little over a decade. So those are the biggest buyers of gold, of physical gold, as of right now. But I mean, beyond that, it's pretty broad. So there are a lot of buyers from retail up to central banks and kind of everything in between.
Yeah, okay, because we're trying to get this picture of the miners go ahead and get their gold and silver, and then we're trying to understand, okay, once they get it and turn around, who's standing in line first to buy the gold, buy the silver, even if it's the raw products.
Yeah, I mean, obviously there's big, part of it goes into jewelry. So there's big jewelry manufacturers that obviously are buyers of gold. That's a part of it. There's part that goes into investment. The World Gold Council breaks kind of this down in the different parts of demand. So that's what we've seen. I mean, investment demand is a meaningful part of it. I think it could be by far the biggest part of it if we see capital flows back into the sector.
Brett, I've heard mining analysts comment that in a gold bull market, gold mining equities usually lead the gold price. However, we're not necessarily seeing that happening this time in this bull market. What is your take regarding why this has happened or not happened this time?
Well, it's fascinating. Like I said, from a contrarian perspective, I mean, this is the ultimate setup because you've got a gold price that's been in consolidation, but it hasn't consolidated that much. It's still at a high price. It's still in a firm uptrend, yet the equities have sold off. That could be from a number of different factors from that perspective, but it does offer an incredible kind of risk reward setup from an investment perspective.
An S&P Global report highlighted that there are a declining number of major new gold deposits being discovered annually. Only 29 of 329 deposits were discovered over the past decade, and they contain roughly about 208 million ounces, or about 8% of all gold discovered since 1990, again, according to an S&P Global report. Brett, in your opinion, why are new gold discoveries declining, and is it a harbinger of lower gold output in the future?
Well, it's just becoming harder to find. I think that the world has picked most of the low hanging fruit. We haven't seen a number of kind of tier one discoveries like we saw in the previous decades. I mean, they've significantly decreased since the year 2000. And I think it's going to continue to decrease. I mean, the grades, the overall grades of these deposits are also going down. So it's making it more expensive to mine the gold when you're moving a lot more dirt for a lot less gold. And, inevitably, I mean, there's always going to be a discovery here, discovery there. But, for the most part, it's becoming very difficult for the large gold mining companies to replace the reserves. So that obviously is going to have an impact on the gold price, the cost to produce it, and the overall kind of floor for where gold will be in the future.
Brett, for the layman out there, how would you explain the royalty business of Metalla and its value add?
Yeah, so the royalty is it's just a phenomenal business. So how it works is you get 1, 2, 3% right off the top. So once you buy this asset, this royalty, it's a non-dilutive interest on the mine. So you own an interest, you're registered on title, you're in the most secure position possible, and that interest is free carried. So buy a 1% royalty on a mining company or a project that the mining company owns. That mining company may spend $500 million kind of developing it, putting it into production. There's no further capital outlay for that royalty holder as the mining company spends that 500 million. More importantly, the equity shareholders of that mining company are going to be diluted significantly over that time, where you maintain that 1% interest in that asset. It's not, like I said, non-dilutive. And where things really get exciting is that once this asset goes in production, it's top line cash flow right off the top. So margins essentially upwards of 100% right off the top into perpetuity. So that means forever. So as a royalty holder, mining is an incredibly risky business. Just in general, it's very difficult. It's even very difficult for the best mining companies in the world today. There's all kinds of risks kind of across the board, from environmental to geological to social. A big one that we've seen recently is a lot of jurisdictional risk, a lot of governments raising taxes or demanding kind of non-interest positions in mining assets in their country. You can't pick a mine up and move it if the government's unfriendly. So there's lots of risks in this business. But if you own a royalty, you don't have a lot of these risks. If the taxes get raised by 10%, your royalty still comes off the top. As long as that mining company is making money, you're still going to get paid that royalty. The mining companies often, have to replace these reserves. So they're going to be drilling. You better believe after they spend the 500 million, maybe sometimes upwards of $1 billion to invest all that infrastructure to build that capex to pull that gold out of the ground, they are going to find every last ounce in the ground and in the surrounding areas. And so what we've seen a lot of mines start with a 10-year mine life. Okay, that's fantastic. So you own a royalty, you've got 10 years of cash flow. What we've seen in the past is after about 10 years, they've got another 10 years of reserves. So it's truly the gift that keeps on giving. It significantly reduces that risk when you own the royalty, as opposed to owning the mining company. More importantly, you have a huge amount of leverage. So all of the ounces in the ground over the next 10, 20, 30 years that are going to be pulled out, all of that value gets pulled forward into what that royalty is worth today. And so if you get $100 increase in the gold price, you just pick up 10, 20, 30 years, depending on how many mine life or how many years of mine life is left on that asset. You pull all of that forward and you have a significant amount of leverage. So this allows investors, when they invest in a mining company, a royalty company, especially one like Metalla, which is a high growth royalty company. We've got a fantastic business that we've built buying these assets on an accretive basis 26 times for 70 royalties. So you get exposure to the top mining companies in the world, diversified across the top jurisdictions in the world. You've got, upwards of 100% margins. And you've got a huge amount of organic growth. And that's really the kind of the kicker of this whole thing, is that there's been so many of so many circumstances where the major royalty companies, a decade ago bought a royalty for 2, 3, 4, 5 million. And fast forward today, it's worth $500 million. And the gold price has nothing to do with that. I mean, the gold price, silver price has nothing to do with that increase of value. It's just they bought a royalty on a project. There was a big discovery. There were a lot of ounces drilled off. And again, you get to pull forward all that value. So what you have is you've got an incredible low risk way to get a huge amount of leverage to gold and silver prices in the future, with a huge amount of optionality. And that includes the organic growth. Excuse me. That's more ounces being found on these projects, kind of as they expand the mine life, and an optionality with new discoveries on the 70 projects, where each one of these operators are spending tens and tens of millions of dollars on drilling at their expense for your benefit. So it's just a phenomenal financial instrument. And when you put a portfolio of these things together, which is what we're doing with Metalla, it can be incredibly impactful. And so we're really excited about what we've been able to build. And we've been able to outperform gold almost tenfold since we started. So that right there shows you kind of the benefits that you get with royalty companies.
My man, you had me at off the top. But Brett, gotta ask, how will Metalla respond to the prospect of smaller gold discoveries ahead and potentially lower gold production in the years ahead?
Well, there are a lot of smaller gold discoveries. I mean, most of the small gold discoveries, I think, probably won't make their way to production. The junior mining industry is absolutely terrible at mining. I mean, it's junior mining, but really what you have for most cases, I mean, obviously there are a select few management teams that have been successful several times. They know how to put a new project in production, and they're fantastic at it. But I would say that's a maybe 5% of the industry. Most of the junior miners just lose money, and it's because you get a geologist that makes a discovery. It's not a big discovery. It shows sometimes some positive economics, and they try to kind of bootstrap their way into production. Mining, again, it's an incredibly difficult business. And so for the juniors and most of these small discoveries, I think that a lot of them will never see production. And so all of that kind of supply that's so-called there, I think a lot of that doesn't even make it to production. And that's kind of the reason why for Metalla, we focus on buying existing royalties. So we don't give, as a junior royalty company, we don't give any capital. We don't give any money to originate new streams or royalties with juniors or exploration companies or anything of that matter. We buy existing royalties on very high quality, large assets that are already owned by the major mining companies, the blue chip mining companies in globally diversified, multi-billion-dollar mining companies around the world. And we buy these royalties on projects that they have in their development pipeline. And the reason why we do that is because we not only can stand behind a Barrick or a Newmont or a Nico Eagle or Pan American Silver that says that they're going to be putting this asset in production because they have the balance sheet, the skill sets, and the personnel to do so. But more importantly, as these big companies move these projects within their own pipeline into production, what we've noticed in the past is that these assets, as they move them towards production, they significantly increase the value through more drilling, more exploration. So a lot of the royalties that we bought 3 years ago that had maybe 700,000 ounces on the property, today we see the property carry over 2 million ounces of gold. So as we've waited the last 2-3 years, the property is worth 2-3 times, or the royalty is worth 2-3 times what we paid for it before it even gets to production. So it's that type of organic growth that has allowed us to outperform, consistently all of our peers, because we have a strategy that allows us to capture that in more of a controlled way.
Yeah, I think a lot of people are getting excited with what you're saying. Brett, Heath, before we wrap up, can you let our listeners know more about Metalla Royalty and streaming?
Sure. So we trade on the New York Stock Exchange under the symbol MTA, and we also trade on the TSX Venture Exchange under the symbol MTA as well. We're in a few different ETFs, the GDXJ being the largest. We've got a lot of liquidity. We trade, volumes have been off recently, but we trade on average usually kind of 3 to 5 million a day between both markets. We're the fastest growing royalty company. We've got upwards of 70 royalties as of today, the majority of which are on these projects that are being advanced by the Facebook, the Googles, the Amazons of the mining industry, the largest, best, well-equipped mining companies in the world. And we're a high growth company. We've completed 26 transactions in the last 5 years. We've done 6 just this year. So it's a very exciting story. We're thrilled with the portfolio that we've had the time to put together. We think that there's just an enormous amount of optionality and organic growth built in already. It's just an incredible time. I recently just sent out an update to shareholders just yesterday, saying this is one of the best, most attractive valuation entry points that I've seen since inception. So, the call and the interview is very timely here, and I hope some of your listeners can take advantage of it.
Okay, and so they can find you at metallaroyalty.com.
Correct. You can go to metallaroyalty.com. You can go look at all of our assets, and we've got a great kind of royalty portfolio global map that you can go click on each asset all around the world and see which ones are in development, production, exploration, the companies behind it, and so on. So you can go to our website, and like I said, you can buy us from any brokerage account pretty much across the world. We trade on the New York Stock Exchange. That's usually the most liquid one, under the symbol MTA.
Okay, Brett, Heath, we appreciate the time you've given us, and I hope we can do this again soon.
Yes, thanks, Patrick. Thanks for having me on.
That was Brett Heath, President and CEO of Metalla Royalty and Streaming Limited, sharing with us his views about precious metals. To find out more about Metalla Royalty and Streaming, please visit the website, metallaroyalty.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. And do also check out the SBTV podcast on iTunes and Spotify.